Welcome to our special video on the collapse of Silicon Valley Bank. Just few days ago, this bank, ranked as the 16th largest in the United States, was thriving. Today, it's a very different story. In this video, we'll examine what happened to Silicon Valley Bank, whether it could lead to the failure of other banks, and how it could affect individual investors like you and me. Silicon Valley Bank, which has been in operation since 1983, was a key player in the technology and innovation sectors. It provided loans and other financial services to startups and entrepreneurs, helping them to grow and develop their businesses. However, in the past few years, the bank had been struggling with bad loans and declining profits. Despite efforts to turn things around, it was unable to recover. Last week, things came to a head. Rumors began to circulate that Silicon Valley Bank was in trouble, and that it might be on the verge of collapse. Depositors started withdrawing their money, and investors began to sell off their shares. Within 48 hours, the bank had collapsed. The collapse of Silicon Valley Bank has sent shockwaves through the financial sector. Many are wondering whether this could be the start of a larger banking crisis, and whether other banks could be affected. While it's too early to say for sure, there are concerns that other banks that have been struggling with bad loans and declining profits could also be at risk. So, what does this mean for individual investors like you and me? Well, if you have money deposited in a bank that's in trouble, you could lose your savings. Similarly, if you own shares in a bank that's struggling, your investments could be at risk. It's important to keep an eye on the financial health of the banks where you keep your money and invest your savings. And, as always, it's a good idea to diversify your investments to minimize your risk. Thanks for watching, and we'll see you in the next video. Please like, share and subscribe.